Tech. Let's focus on that one and let's welcome on board Warren Harris, CEO and MD, and talk about how their quarter was and what's the visibility like going forward. Warren, good to have you today on ET Now. I was just going through your numbers and your revenues have declined about 2.5%, but there has been an uptick in your PAT. Tell me, what were the levers behind the margin expansion despite a top-line dip that you saw?
Well, I think the margin improvement is a testament to the operational rigor that we are driving into the business. You know, we have a very strong delivery team that is applying all of the standard levers associated with maximizing offshoring, improving our people pyramid, and leveraging automation to drive productivity. And I think you've seen that play out in the context of the improvement that we saw sequentially. We're also really excited about the impact that we were able to celebrate in Q4 from the joint venture with BMW at a net profit and an earnings per share perspective. And that certainly augurs well, I think, for the rest of FY26.
About the deal wins as well and the growth strategy thereof, because you closed 17 large deals in the previous fiscal, including the one marquee $500 million deal as well. Tell me, what kind of revenue contribution can we expect from these in FY26?
Well, I think the initial anticipation that we had at the beginning of the fiscal year was that those large deals would play through into improvements that we would see first quarter, second quarter, and certainly the second half of the year. I think the recent tariff announcements have prompted a number of our customers to hold in terms of the launch of various product investment decisions, some of which are related to those large deals that you referenced. And so, you know, I think at the moment we're looking for a relatively soft start to the year, but we certainly hope that the economic environment will start to stabilize, and based upon that, we certainly are bullish in terms of the second quarter and again the second half of the year.
All right. Hi, Warren. Good morning. Good to be speaking with you. But Warren, when it comes to your segments, then auto ER&D remains a core vertical for you, but revenue from the auto sub-segment has actually declined sequentially. Was this due to the macro slowdown, or were there any customer-specific delays?
No, I think it's really related to market conditions. I think if you look last year at the uncertainty in and around the elections in the United States, given the polarized position of the Republican and the Democratic Party, particularly as it pertains to electric vehicles, I think that prompted delays in terms of decision making. We've also seen runoffs in terms of incentives in Europe and the growing impact of competition from China. So I think that really has informed the headwinds that we've been grappling with. I think the good news is that given the fact that investment decisions have not really been made in a material way in the last 12 months, there's a lot of latent need for our customers to invest in new products. And I'm absolutely convinced that as soon as clarity is brought to bear in and around US tariffs, we'll see that latent demand present itself in terms of decisions. And again, I'm fully expecting as soon as that happens, we will return to growth.
On that point that you said right now, with the US offering relief from overlapping auto tariffs and incentives for local assembly, how do you see this affecting global OEMs' outsourcing strategy? What could be the impact on that front?
Well, I think you're going to see a focus on building in resilience to supply chains. I think most blue chip OEMs are going to be looking to ensure that they have agility going forward, given the impact of some of the decisions that are likely to continue to inform the policies of different countries in different parts of the world. I think there will be an investment in smart manufacturing and tech to enable that. That provides upside for organizations like ourselves. And I think going forward, as far as product is concerned, the last 4 to 5 years has really been informed by a commitment to electric vehicles and specifically battery electric vehicles. I think you'll see a much more balanced portfolio of propulsion systems. I think there will be ongoing investment in internal combustions. I think there will be a focus upon using plug-in hybrids as a bridging strategy towards the transition to EV. But we are absolutely convinced that the end goal will still be a predominantly electric propulsion system. And so there will be continued investment in that space. And underpinning it all, there is a tremendous investment that is being made in software and embedded electronics. I was in Shanghai last week at the automotive show in China. I think the Chinese OEMs are really setting the direction for the industry. And I think everybody else is going to be playing catch up. And we certainly expect to intersect and provide support for those organizations that are committed to improving their competitive position in the future.
And are they also preferring India-based vendors like yourself?
I think that's been increasingly true now for more than a decade. I think the capacity and the capability that we have in India, the flexibility and the agility that we've got, the skills and the expertise that can be mobilized at scale. I think there's nowhere else in the world that can really compete with that. So I think any organization that is committed to being relevant in the engineering services market is going to have a strong nexus here in India. And we continue to believe that what we've already built will differentiate us.
All right, Warren, so good to have you on ET Now today. With this, we let you go on that. Thank you so much for taking the time out and speaking with us.
Always great to talk to you. Thanks ever so much for your interest. Appreciate it.
If you like this video, then like, share and subscribe to ET Now.